Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
That's interesting, Jack. And you know what? Last year, I would say, well, obviously, and it's why it's important to at least understand where vol is, because last year, I don't think anyone can pick the bottom, but when you saw vol, I think the low, at least when we started trading any of these a couple of years ago, was around 5 or 6. But last August, we had already seen a lot of the storm, or some of the storm, come through with Bear Stearns in March, and volatilities were, obviously in retrospect, very, very cheap at 9 and 10%, when the ultimate low was only 5 or 6%. If you knew that, and some of Jack's recommendations that he just suggested about buying a call on one and a put on another, you'd benefit twice. You'd have the directional forecast being right, and volatility was going your way. The options were exploding in price. So if you, if you believe that volatility is somewhat reasonable or cheap, then you want to be a buyer of options. And again, the benefit of being a buyer of options is limited risk also. Jack, do you see anything else there? I don't, but if you see anything else, maybe something else came in when I was just speaking.
No, it's real quick. Phil had asked how much commodities can China store to keep the prices up. Great question. I don't think anybody knows that answer. They've got a lot of buying power. But that's actually part of our story. We think a lot of the stimulus has been front-end loaded by China, and a lot of these purchases of copper and other commodities, from a strategic standpoint, regardless of what happens in the market, maybe long-term make a lot of sense for China. But we do think they've gotten a little bit ahead of themselves on these purchases, and that has created some price runs up on commodities that otherwise wouldn't have happened. But not sure what the answer is to that, Phil, unfortunately.
There's another question from William about, he says, is there someone that you would recommend to watch for just option trading strategies? There's so much good info, but kind of overkill as far as it. Well, we're trying to give you some great ideas. Here's the point, William, that there are option advisors. There are some guys out there that do that they would recommend a certain, call or a certain put. I can't really recommend them which one is best. I would recommend that you go to optionseducation.org and learn more about options. I mean, I just briefly went through some of this stuff today, just in a couple moments. But, yeah, you're going to want to understand a little bit more about the volatility. But remember this, there isn't one best option strategy. So when Jack says he keeps it simple, you know what? That's a pretty good strategy, because even though people talk all kinds of great game about talking, such as trading a butterfly or an iron condor or this or that, it's a forecast. You got to have a forecast, and you need to manage the risk. So if your forecast is that you think an asset's going to be moving up or down, a call or a put may make a lot of sense. To answer your question, which strategies are best or how you can get involved, just learn more about spreads. I showed you that one vertical call spread. That, again, call spreads or vertical spreads in general are going to be a more moderate approach. And if you don't mind me using a baseball metaphor, it's like hitting a single or a double. You're not going to hit a triple or a home run that you would get if you were buying a single-legged option. But on the other hand, you're not going to strike out either, because if your prediction is sort of neutral and you're buying in a slightly in-the-money option, you're going to do all right. So, consider vertical spreads, William. Please come back, and we have over 125 presentations on archive, and I've done a lot of the basic. When I say basic, they're not always basic. Some of it could be vertical spreads. It could be volatility positions. They're all via archive, William, so please check that out. Jack, you see anything else? Otherwise, closing comments, I think, are in order.
No, I don't see anything else.
Jack, you mind
answer.
Yeah, just a closing comment, and then we'll wrap it up.
Yeah, just a comment would be, just try and keep in mind that these aren't one-off events, that there's one perfect currency to use as a carry trade currency, and understand there's some real opportunities. And if you can understand the dynamics that make the trade make sense, and some of the dynamics that could get out of whack to make this trade not make sense, and you can get ahead of that a bit with your bet, you can make some real money here if you understand why some of these things may unwind. So just understand the basics and just watch the news, and I think you'll see some opportunities present themselves.
Jack, thanks again for joining us. You took time out of your busy day to spend a couple hours with us. I really appreciate it.
Sure.
Just want to remind everyone, so thanks again. I want to remind everyone, please sign up for the Currents, the daily free global macro commentary. You could sign up at the Black Swan website. It's www.blackswantrading.com. Go and check that out. If you're interested in the archives, you can go to the ISD site, www.isd.com. You can check out the webinar archives. Also, I want to remind all of the attendees that next week we have Randy Frederick with us, and he's going to be talking about credit spread strategies, how to hedge your currency exposure. That'll be at the normal 4:30 time Eastern. Next Wednesday, we have a special presentation. Jack Crooks will be back with us talking about China. So I know a lot of you are interested in China risk and benefit in the global currency market. Jack will be talking about that and what are the implications for Canada, Australia, Europe, of course the U.S., and how I'll have a couple of different options, strategies available, some somewhat current prices, and I'll give you a couple ideas. But please join us again. That's at a special time, which is 2.5 hours later than this presentation. So please join us on that. If you can't make it, you can make it via the archive the following day. So next week, Tuesday at 4:30 Eastern, and on Wednesday, Jack Crooks will be back at 7 o'clock. So Randy Frederick on Tuesday and Jack Crooks on Wednesday. Jack, thank you so much for joining us today, and another great presentation. Thanks.
Thanks, Steve. I appreciate the time. Thank you, everybody, for hanging in there. I appreciate your interest. Take care.
Thank you. And so on behalf of the ISE, the International Securities Exchange, this is Steve Meisinger saying thank you very much for joining us, and please come back very, very soon to join us with Randy Frederick next Tuesday at 4:30 Eastern, and Jack Crooks at 7 o'clock on Wednesday. If you're interested in any articles, you can visit the ISD site, www.isd.com/FX. You can actually get me at www.isd.com, Ask Steve. You can click on the education articles. We have a weekly outlook, and you can even visit the archive. So thank you so much. On behalf of the ISE, it's Steve Meisinger wishing you a great trading day tomorrow. Bye now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.